All right. What's up, everyone? Happy Sunday. Hope you guys are enjoying your weekend. And I thought to drop the video here publicly, um, kind of talking about the markets. I'll talk some individual sectors. Where are we at? Is we're in a very interesting part of the cycle, and I believe we're entering a pretty important phase, which I want to break down and talk about a lot of things. First of all, obviously, we're looking at SPY here, the S&P 500. When you're looking at the index, things look like they've been consolidating as leadership kept expanding, right? So we've seen broadening. We see so many sectors that are green and still showing a lot of strength out there, while the semis and the AI infrastructure trade keep rolling over. And I think there are a lot more opportunities than people realize right now. And these are the things we'll be tracking every day in the Discord over the coming weeks, obviously. So I just did think that if I'll just throw my thoughts out there, it might help a person or two. So let's start, right? First of all, the big picture. The markets are changing, not bearish, not bullish, just changing. All right, that's what we see every time when we see a popular theme in trade kind of entering in correction, which we have seen right now with the AI infrastructure trade. We've obviously seen SMH, semiconductors, which again, I've talked so many times about semis in the last few months. You guys know my take. I've been a very loud buyer. I'm long multiple semiconductor names, but I've been really in a mode of taking profits. And I'll say once again, my take, I could be wrong, but at this point, I don't care about being wrong. I care about being on the right side of the trade. At this point, this is not, semiconductors are no longer exciting me personally as buys. And I still think we're going into highs. I think this semi trade going to, play out once again. Just in my opinion, people forget about the cyclical nature that these companies are part of, obviously. And yeah, that's even my favorite ones. All the Marvel and AMD. I still hold AMD, INTC as well. Nothing I talk about here, by the way, is financial advice or tax advice. Everything I'm saying here is for entertainment and educational purposes. I'm going to talk about what I do, what I've done with my positions, and my plan and my thought on the markets. Everyone should obviously do what's best for them and trade your own plan, right? Now, SMH, again, one of the most important areas of the market, because they're obviously where the AI spend being kind of looked at the most through the landscape of chips, right? And as I've said, they look to me not that bad. Individual stocks might have sold off a lot, entered corrections, true, but we've seen it every cycle, and then they keep going a lot higher. In my opinion, I still believe in the AI trade, by the way. But in my opinion, semis this year are no longer in the same spot they've been in the last few years, which I've been very loud about being a buyer. So this is why I'm a seller, and I still plan on selling more and more into the next year or so when it comes to semiconductors and starting position into the new wave, right? Because again, the AI leadership is not as clean anymore. We're starting to see money rotate instead of simply chasing the same names. We suddenly have XLRE, the real estate ETF, just on new all-time highs. I mean, it keeps seeing all-time highs, and I don't think too many people talk about it, right? From the rotation side of things and from actual money going into, you can call it value, you can call it real assets, but there's a lot of things. For example, the last thing I just posted on X, you guys can see it, but it's the divergence between hyperscalers and semiconductor cash flow, which is very much worth watching. It's just my last post that I made as one of the reports we post all the time in the Discord as well from the Bank of America. And personally, I think the hyperscalers overall starting to look very attractive, right? And it happens by the week. Like every week or so, they're starting to get better and better looks out there. Google just sold off, and again, I'm a huge fan of Google. I'm still long, I still like it. I just don't think it's at the same part of the cycle it was when it was at, again, 150s, 160s, when people talked about Google as being a search engine company. Now suddenly it's the hottest name out there. Everyone wants to own Google, right? And I think it just once again shows us the psychological part of the market, where people look at what already performed well rather than what the markets are pricing in. All right, so we still got a lot of big names reporting this week. The mega tech, mega caps, mega AI, mega everything. We got FOMC meeting coming this week, so I'm going to talk about all of it. I don't want this video to be too long, so let me first of all say that I got 3 sectors that I'm eyeing now the most. Okay, and once again, in terms of individual opportunities, we're gonna talk about it daily, as we are all the time in the chats, on streams. But I wanted to drop on X here for all of you guys to kind of see the main things that I'm watching. All right, so first of all, XLB materials. All right, long story short, chart looks like it could be setting up for another major breakout, and we've seen the same thing here. It was a heck of a trade for us. If you just look here at what XLB has done into end of 2025 and basically the beginning of 26 here, it had a major breakout into new highs and it kept squeezing big time. So materials really squeezed a lot higher and topped around February. And then if we look at the spike at the same period of time, it barely moved. So from January into mid of February, you chopped. S&P 500 chopped, Index chopped, and a lot of the same thing happened. You got a rollover from the AI trade and tech sold off, while XLB outperformed. I'll show us again, big time. All right, so again, there are some flaws and something that we want to watch and keep watching, but I think this is something definitely to stay on watch from here into the next few weeks and months. Also pretty simple, right? Inflection point of both trends to me, kind of, a sector that's been consolidating, part of the real assets value kind of theme that I've been eyeing and talking about, that I believe money can definitely pour into. Second sector that I want to watch big time and turning also, I've been a fan of XLI and industrials a lot. I mean, I'm long some names, but I think it's more of the broadening story once again here, that if you look at the weekly, for example, industrial just had the high, I think the second, yeah, here you go. The second highest close ever last week as we speak. And think about how many stocks, high beta, and overall, even, solid companies out there just really rolled over, while industrials gave you the second highest close ever on the week. And it closed green on the week, by the way, last week. And not only that, but I can even show a bit of flows on XLI that starting from this potential risk reversal, we're going to see what open interest tells us. It's a small trade, right? It's $200,000, $200,000. So you're talking about $400,000. Both of them are openers, though. It's the only trade above 100 grand for one leg. And obviously, it's a bullish risk reversal, looking to me like, at least. A very interesting choice, because the 183, obviously, you can see at the money at the time, 184. Same thing. It's pretty... it just, it looks solid. You look at the deltas, 0.50 on the call side, the puts. It seems to me like a pretty directional trade, being only 1 month out, even less, because it's into August OPEX. 183 puts, 184 calls. Very interesting. Happened at the open of Friday, July 24th, right? And then you had a lot of other things that you can keep watching from these dudes that opened just 2 days ago, 2 trading days ago, right? You had the 185 calls for September. A solid amount here, right? $800,000 traded. Half of them were sweepers. Most of the volume translated into open interest. And obviously this position is still open out there into September. The next quarterly OPEX, which is a big one to position in September. So flows into September right now become a lot more relevant than even the August ones to me. And that's just a bit of flows. Obviously, we've seen a lot of individual names, but XLI is another one. Okay, industrial that's showing the broadening, even a part of the AI trade, by the way, right? I mean, you could still say that this sector is a positive, a net, positive delta for the markets to see them keep going higher. And once again, we do have FOMC meeting this week, a lot of big names reporting. So this is why it's such a crucial time to, to watch these sectors if and when the broadening continues. And that's even if pockets of strength out there in the AI trade continue to show up. You still gotta watch them. And then the third and last one gonna be financials, XLF. Discord knows it. I've been very bullish financials. I still am for many reasons. Now we're entering into, once again, the FOMC week. So I'm very interested to see how financial stocks react, not only to the rate decision itself, but to, you know, the nature of Warsh's speech, dovish, hawkish, like what's going to happen there. Highest weekly close ever right now, last week. So once again, a lot of strength out there in the markets. And industrials and XLF financials, both of them are sectors that, you know, they often participate when the market broadens. But this one, I'll even say short term into next week. Because you guys know I don't really trade by week, day by day. It's not my style. I really look for the next few weeks, months. And I don't mind sitting on my hands for a long time with my positions, even if it means portfolio sometimes goes red. I don't believe in over trading. I don't believe in forcing trades. You want to let the markets come to you. And obviously there's been opportunities, don't get me wrong, in the last few weeks and months, definitely. But overall, most people kind of saw some red in our portfolios, right? I mean, I know that I did, obviously. So it makes me now say, okay, I want to let the markets come to me, not force anything. And this one is one of those names, again, that kind of just played out from the broadening, that's not only showing you strength in everything, but it's showing you that the index can hold while the most popular trades roll over, but so many sectors seeing a lot of strength still. So when this happens, I just say, okay, wait, like we gotta see, is this a real deal, a real rotation that's happening and keeps on got more legs basically, or is it just something temporary before the AI trade, picks some legs again? Because I do believe that the AI trade is not over, not at all. But right now we're at the point where a lot more opportunities will show up. But as I've said, financials, they'll probably take their cue from after FOMC. And then last thing, once again, I'm gonna say, I'll mention once again, just Magnificent 7, Tech. You can even look at XLK, even though some big Mag 7 names aren't even part of the XLK. Just, the way that it's structured, this tech ETF specifically, which not many understand, but it's important because you can see a lot of semiconductors sell off and, broadening sell-offs in the AI infrastructure trade, leading by the second order trades, the semiconductors themselves, which just gives us a lot of red, right, in tech names. With that said, they're cheap right now. They're entering a very cheap territory, in my opinion. And large tech just gonna show us, if we see more weakness in tech, it's just going to create, in my opinion, more opportunities instead of risk. We're at the part of the cycle where Magnificent 7 specifically is just starting to look good. Again, I can do indicators, Charlie, to give you some Fibonacci retracements, moving averages. To me, I'm just going to show you this to see how we had a very red week last week after a few red weeks, but then strength. But now, again, showing you kind of a bearish pattern. I think this is not the time to be too stupid short term. Like, I'm gonna be honest, a lot of people trying to trade it short term. You can definitely do it, don't get me wrong. We got a lot of people in Discord, they trading all the time. They trading for a living, right? We got a lot of members. Most members just kind of, patient, either investing long term or just swing trading and waiting for opportunities. So we try to read the markets to better help everyone with their styles. But my point is that even if you're trading short term, I think this week and the next 2-3 weeks going to tell you a lot more, and everything can change in a second, like in one day. That's why this week FOMC meeting is so important. That's why the big earnings that are coming are more important, in my opinion, than me just giving you some levels, drawing lines. I'm not one to like to say bullish above, bearish below. I think it's bullshit. Like, anyone who says this, just they have no take. So they'll draw some lines and say, well, let's see what happens below, let's see what happens above. No, I'm saying the sectors that I like, the three that I just mentioned, right? Financials, materials, and obviously industrials, and then Mag 7 are starting to get cheap to me, but we gotta see what the earnings are telling us. And then whether it goes up or down, I'm gonna like Magnificent 7. I'm going to like names in the NASDAQ as well, just due to kind of everything being already priced in, whether up or down. And then if you go up, you can go a lot higher, in my opinion. If stonk goes down, then we wanna buy the dips. But this is an area that, in my opinion, being in reaccumulation. I'm not going to go into flows and everything that we've seen, a lot of interesting dark pools that we've seen lately, a lot of positioning in options flows, because we don't have time for it right now. But again, I'm trying to summarizing a lot of things that we've been monitoring here into one thought process, right? So again, it's I'm gonna tell you my thing also with the FOMC meeting, why it's so important to me, because I just want to see if the thesis keeps getting confirmed, and then I'm going to position this way, or if it's just going to once again roll over and give us more opportunities in the AI infrastructure trade, which I already also start to like. So we're entering into an area where I like the most, where it's deep buying opportunities. The question is industrials going to keep showing strength? Are materials setting up for what I've said? And we played it beautifully into beginning of 2026, right? Heck of a trade in materials while everything else chopped and SPY barely moved while materials squeezed higher. Again, this is just the daily chart, not even weekly. So every day gonna tell us more. Last time broke out, it only consolidated for a week or so, but kept creating higher lows. Saw a lot of bullish inflows, volume dried up. So it just showed you that the thesis could still play out, and that's why we liked it. Same thing I'm going to say right now on materials. Same thing as I've said on XLF, which is again more of I prefer to look at financials right now, because I don't like to trade maybe the ETF itself, but I don't like to trade too much banks. But I think there are a lot of areas in financials, even the high beta names, that can benefit from a lot of things that related to the rate situation, and even yields potentially dropping, because I believe the 10-year and everything with everyone scaring that's going to go to a gazillion %. I don't think it's going to happen. Even if it goes higher, okay, just more buying opportunities. And again, even you look at the fear and greed index from CNBC, which measures a lot of different things that are, in my opinion, more interesting than just looking at it dry, but it's still at fear, right? It's 39. You got extreme fear, it's breadth. Well, if you look at, right, at least last time I looked at, I got a blackout, guys. What is the, XLP also, if you just look at staples, gonna show you a lot of the defensive trade, but that's different part of the different, that's for a different video maybe anyways, like the defensive trade, and now it can play a role even in a broadening and market that keeps going a lot higher. But yeah, even if you look at the breadth, like RSP, equal weight ETF, pretty strong. So what's going to happen is this going to roll over, and then people are going to say, that's it. Indexes now also, indices going to roll over as well after everything rolled over. Usually it means bottom is closed. But if this opposite happens, then people are left sidelined on the market. So you don't want to be left sidelined. That's exactly what happened here. End of March, I remember everyone was scared, talking about selling, market crush is coming, and the market reversed on them in no time. Matter of days, week or two, and Nasdaq showed you, Google, Amazon, the best April. The month of April was the best month in decades for Amazon and Google. So that's how I look at it now. I want to find the same trades, the massive trades that people are kind of afraid to position into. And again, it's a game of risk reward at this point. And that's why I said, I believe that's it. It's time to start being a buyer. Not start, I've already been buying, but besides the sectors that look like it's more and more broadening, now it's time to potentially start looking at the popular names, right? What everyone's looking at, the Magnificent Seven, big tech, the AI infrastructure trade, semiconductors, even if it's just for a trade. But you want to potentially start looking at it as being a buyer. And again, I've said on the macro grand scheme of things, like what I've been buying in the last few years, I'm a seller on semis. I've been selling a lot of semi shares, I talked about many times, and I'm still planning on selling if indeed we go higher this year or next year. I'm a seller. But short term, into the next few months, I think it's getting closer to being a buy way more than it is a sell now. Semiconductors. So once again, it goes back into the AI infrastructure trade. But yeah, these are just some sectors that I really wanted to drop out there for you guys to keep watching. We have a lot of flows that's supporting the thesis that I've said about XLI, XLB starting to, all of them kind of get confluenced with both charts, flows, and most important, the part of the cycle that we're at. As I've said, there's a lot of strength out there. While at the same time, what you also really see is a lot of people blowing up right now. I never like seeing this, but usually when you see so many, you know, accounts blowing up and people using too much leverage and over positioning on the short term, expectations rather than the macro cycle, that it normally ends bad, right? And I think a lot of things that you're going to see here in the flows from the next few days and week or so are going to be tail hedges, are going to be a lot of hedges into everything that we have this week. So you gotta understand that a lot of flows that you'll see here related to earnings that are coming soon, positioning, even sympathy plays, not necessarily stocks that are seeing, earnings right away, but rather as a hedge against stock position. So it's going to be very noisy, which is why when you watch options flows right now, you got to understand that a lot of them are going to be, I don't want to say noise, because even some flows that are noise are many times more alpha than even just someone buying calls and being bullish and it played out. Because when you see a lot of lopsided flows entering into one side of the trade, while the cycle looks like it's picking steam under the surface, and one big player has been in reaccumulation mode, or two or three, then I usually like to see, okay, if the big money is accumulating, but so much money is hedging, piling into puts, that the even put call ratio could show you that everything looks bearish. But this is such a dry stat to look at, just put call ratio, right? It's like looking at volume. Volume means nothing without the context behind it. A lot of the volume is just liquidity traps and climax and dark pools, obviously, and block trade through ATSs are going to be inside the volume that you see here. So liquidity matters so much more than just volume. And this is why I'm saying, to me, if you see volume, even if it's red and selling volume, this is starting to be a good signal, especially since the thesis of a broadening already been playing out. Real assets, you see XLRE, again, real estate, all-time high just now last week. XLF, all-time high just now, right? Mid-July, a week, two ago. While the weekly just gave you the highest weekly close ever. XLI, second highest weekly close ever. XLB looking like it's about to break out the big time. So now it's the big time to watch the same things we've been watching in the end of 2025 to see if the broadening continues. So yeah, I didn't want to talk about too many flows and specific individual trades that we caught on the tape, because we don't have too much time for this. Again, we're going to break it all down on Discord with individual trades and ideas and how to potentially play what's coming ahead. But these are the times that I like to talk about markets the most, to be honest, when there is uncertainty, right? When things look like they're confusing, because things do look like they're confusing. So again, we gotta let it come to us. We can't chase, as I've said, anything in this market. Things could change in a day or two, and suddenly the picture becomes a lot cleaner and clear. And you can't force anything in this market. So I had one more thing that I wrote down that I wanted to talk about. I'm not sure, I don't remember what, but yeah, I guess I'll end just quickly with saying what I did talk about in some part of this video, which is kind of obvious, but still, in my opinion, very much important and worth noting, especially as we look at Nasdaq right now, the QQQ, and where it's at right now, right at the inflection point, after obviously selling off and seeing once again more volume throughout the sell-offs. So here's what I got for you, because this is where a lot of people are positioned in, right? The AI trade and Nasdaq and tech. And I'll say it again. As I've said it throughout the video, but it's very important to understand it. You get a lot of people that are, leveraging up to their teeth. You get a lot of people that ignore the fact that we are in a broadening part of the market, which means there's still a lot of strength out there. And last time that it happened, people got bamboozled, right? And especially what we saw not only in the end of March of just this year, a few months ago, and the massive upside, the squeeze basically, that left so many people sidelined. Again, we saw the same thing in April in the tariff sell-off of last year, 25, right here, V-shaped recovery. And I think it's more likely that the markets go to all-time highs, especially the S&P 500 SPY, while there's stronger broadening out there. Even as I've said, if Nasdaq shows strength, there is a chance of people, shorting the market into a crash. And again, these are just my thoughts. Obviously, for now, it's been playing out. I could be wrong, but this is what I would focus on. And remember, what you see so many people basically posting about how this market is horrible and how the accounts been blowing up and leverage is going out of control. I don't enjoy saying it, but the truth is that usually when people blow up, it means that liquidity did its thing. The algo overlord got what it wanted. Market are kind of, nature is healing, quote unquote, and it's time for anyone who was a bit patient to reap the rewards. So yeah, these are the sectors I would watch. These are the names I would watch. I still think, as I've said, that the AI trade is not done, but I'm not a fan at all of all the high beta names, unless you're really trading in short term and you're quick about it. I'm not a fan of being positioned there, even though now it's maybe, hindsight 2020. Maybe if anything, now it's going to present a lot of buying opportunities in the AI trade. And I'm talking about even high beta names, like everything, right? Like from the photonics, even nuclear, even I don't know, space, everything that's been selling off a lot. Maybe now it's actually a solid time to start looking at some dips for sure. But in long term, even if it goes double from here, I think another 80-90% drawdown will happen. So it depends on you how much you like your portfolio to be leveraged on this type of assets. And I think that's it, guys. Again, I hope it kind of helped. I hope you liked it. I thought about doing this video at the beginning for the Discord and X subs, but I decided that I'll anyways talk, because I'm streaming every day on the Discord. We're going to break out individual names and individual stocks as we do every day, and more about this trade as more flows coming this week. I'll break it down anyways in the chats and in the streams on the Discord. And for X subs, I'll also give you some alpha as always, from what I see at least. And I hope this helped you a little bit. That's it. Appreciate you guys for watching. If you have watched it, much love. And happy FOMC week for those who celebrate. I'll see you around on X. Much love. Peace out.